The reason I have this channel is to help you become a better trader and a more informed trader. And one of the best ways to become a better trader is to understand how the economy and economic news affects the stock market and might cause stocks to go up or down in price. Over the past few months, we have seen inflation come down steadily, and we've seen the stock market rise as a result. But this CPI inflation report that we're getting on Thursday might actually show an increase. And if it does show an increase in inflation, what do you think that's going to do to the stock market? The Consumer Price Index, or CPI, is being released on Thursday. It is being released at 8:30 a.m. or about 1 hour before the market opens. Now, last month, CPI came in at 3.0%, but this month it is expected to increase to 3.3%. And we also have the Producer Price Index, or PPI, coming out on Friday. Now, part of the sell-off in the stock market last week was mostly due to the Fitch downgrade of the U.S. credit rating, but part of the sell-off might also have been fear over what might happen if inflation starts to go back up again. And this fear isn't just 1 month of CPI. There's a lot of data that shows inflation might be rising over the longer term. Yellow Trucking, a company that has been around for 99 years, just filed for bankruptcy, and its downfall is rippling through the economy. In addition to hurting the jobs market with 30,000 people laid off, industry experts say they expect prices to rise, with Yellow's rates now off the table for many shipping customers. Yellow's customers are likely to see higher freight rates now that Yellow's trucks and its low prices are off the market. As a result, businesses should expect higher delivery costs as trucking companies are seeking stunning general rate increases. The rising cost of shipping is going to eventually get passed on to consumers, which is going to increase inflation. In addition to increased shipping costs from the trucking sector, rising oil prices are bad news for drivers and the Fed. Booming oil prices last year powered U.S. inflation to 40-year highs. That trend was reversing in 2023 until now. Benchmark crude prices are up more than 18% over the past month. The gains threatened to prop up inflation just as easing pricing pressures had investors betting that the Federal Reserve would soon wrap up its campaign of interest rate increases. Over the past 3 months, wholesale diesel costs jumped 36%, jet fuel climbed to almost 40%, and gasoline rose 19%. You can see on the chart here, the average weekly retail gasoline prices on the far right of this chart are starting to rise once again. And this surge in oil prices is challenging investors' bets that the Fed can pull off a so-called soft landing. A soft landing is when the Federal Reserve is able to get inflation below 2% without causing a recession. It has never happened before in the history of the United States, but many market participants believe the Fed is in fact going to do that. However, if inflation continues to rise, this could cause the Fed to continue to raise interest rates, which in turn could trigger that recession. In addition to what's happening here in the United States, what's happening in Asia could also hurt inflation. The era of ultra-cheap stuff is under threat. Factories across Asia are struggling to attract young workers, which is bad news for Western consumers accustomed to inexpensive goods. Asian factories have had to increase wages and adopt sometimes costly strategies to retain workers. Toy and game maker Hasbro said this year that labor shortages in Vietnam and China had pushed up costs. Barbie maker Mattel, which has a large production base in Asia, also is grappling with higher labor costs. Both companies have raised prices for their products. And that's what happens when the costs of companies go up. They're forced to raise prices of their products, and this in turn causes inflation to go up. And this is why a lot of people are starting to believe that inflation is going to turn around. It may have bottomed out in June and might actually start going back up again starting in July. If it does, this could push the stock market down. Now, this doesn't mean that we have to lose money on our investments. There are opportunities to make money here. One is by possibly shorting the market, but that's kind of risky given the fact that market sentiment remains extremely bullish. I think a far safer play would simply be to go long on the VIX. The VIX is a volatility index. It's not directly tradable, but you can buy options with it through some brokers. Specifically on Webull, you can buy options on the phone app of Webull. You can't do it on the desktop, but you can do it on the phone side, and you can also do it in TD Ameritrade as well as a few other brokers. Buying options on the VIX, I bought some options for around November for around 20. It's currently at around 17. However, if there is a major drop in the stock market, then the VIX will very often rise to between 30, 40, or even 50, which means a 20 call option could end up making a lot of money. And if it does, that for me is a really nice hedge against a possible downturn in the market, given how bullish my overall portfolio is. So if you're concerned that inflation might start going back up and stock market might go down, as it's already showing signs of doing with Apple in a free fall over the past week, and all four major indexes already showing complete and total bearishness on the daily charts, there's a really good way to hedge your portfolio with some call options on VIX. Now, you might have heard about the commercial real estate crisis that's affecting banks, and the biggest focus has been on office real estate. But did you know there is actually another part of the commercial real estate sector that is twice as big as office that has fallen just as much as office and is also threatening to destroy banks? What I'm talking about is the multifamily sector of the commercial real estate market known as apartment buildings. Apartment buildings, long considered a real estate haven, are emerging as the next major trouble spot in the beleaguered commercial property world. The apartment sector's main problem isn't a lack of demand, it is interest rates. The sudden surge in debt costs last year now threatens to wipe out many multifamily owners across the country. Apartment building values fell 14% for the year ended in June. That drop is roughly the same as the fall in office values. Mortgage delinquencies in the multifamily category are low, but they are increasing. Borrowing costs have doubled, rent growth is slowing, and building expenses are rising. Outstanding multifamily mortgages more than doubled over the past decade to around $2 trillion. That is nearly twice the amount of office debt. Everybody is focused on office. The risk of rising apartment defaults, though, is a really big issue that is not getting the attention it deserves. So this is another thing that we're going to have to keep our eyes on in the future to see if this causes more bank collapses, as many people fear it will. And if we do get more bank collapses later on down the road, either towards the end of this year or into 2024, we could be looking at a crisis that is just as big as it was in 2008. So we might have to deal with a little bit of a recession here before we can go on and have a really nice long bull run like we experienced over the past 13 years prior to 2022. Now moving on to the individual stock market news and earnings, Tesla CFO Zach Kirkhorn steps down. The last time Tesla's CFO stepped down about 4 years ago, the stock fell about 4.5%. Today, Tesla was down about 4%, but it did recover a lot of those losses throughout the day. Tesla closed the day down less than 1%. And Apple's iPhone 15 is reportedly set for a mid-September launch, but investors didn't get too excited given the fact that Apple's already announced they expect September sales to be quite low. Apple stock was down about 1.73% on the day. And now moving on to the earnings for this week. Monday after the close, we had Palantir, Lucid, and Beyond Meat. We're going to talk about their earnings in just 1 minute. Tuesday morning before the open, we've got UPS, which is often seen as a barometer of the overall goods market in the United States. Then after the close, we got Rivian, AMC, Upstart, and others. Then Wednesday before the open, we've got Roblox. And then Wednesday after the close is a big one. It's Disney. And also we've got Plug and the Trade Desk. By the way, when it comes to the Trade Desk, they have a long history of beating earnings with major stock market rises after earnings. That might be a good one to buy call options on. Then Thursday before the open, we've got Alibaba. And then we follow up with a few other companies later on in the week. So let's talk about the earnings that came out earlier today. Berkshire shares hit an all-time high as investors cheer their strong earnings and Buffett's near record cash stockpile. Berkshire Hathaway was up $18,320 on the day to close at $551,920. And Palantir reported a 13% increase in revenue growth and issued guidance that topped estimates. Earnings came in line with expectations of 5 cents per share, and revenue also came in line with expectations at $533 million per share. In addition to reporting guidance that topped analyst expectations, Palantir also announced a $1 billion buyback program. Palantir stock was up 2.56% after hours. And if you're wondering why Palantir stock didn't rise more than 2% after earnings, it mainly had to do with the fact that Palantir was already extremely overvalued going into earnings. Palantir's stock was going into earnings with a forward PE ratio of 84, essentially expecting forward profits to increase about 400%. The profits are increasing, but not by 400%. And that's why Palantir stock was only up about 2% after earnings. Lucid also reported earnings after the close on Monday, and Lucid missed revenue expectations after their EV deliveries disappointed. Lucid reported a loss per share of 40 cents, which was worse than the loss of 33 cents analysts were expecting, and Lucid's revenue came far short at $150 million versus $175 million expected. But a recent capital raise extended the EV maker's runway by 1 year into 2025. That means that even though Lucid is struggling with making money and they're struggling with their deliveries and revenue, they do now have enough cash on hand to make it through the end of 2025 versus previously they only had enough cash on hand to make it through the end of 2024. And investors tended to overlook the disappointing earnings as they really liked the fact that Lucid was able to raise some cash. As a result, Lucid stock was up about 3% after hours, although it did fall 3% on the day. Beyond Meat also reported earnings Monday after the close, but their earnings were not great. Net revenue plunged 30% to $102 million from $147 million a year ago. The stock got clobbered. It was down almost 10% after hours. So that's what's going on in the stock market with all the stock market news that came out on Monday and the earnings that we have to look forward to. If you got a lot out of this video and you want to get more market news and insights like this, sign up for my free newsletter. On that free newsletter, it goes out every Sunday night, gets you prepared for the week ahead. In that free newsletter, we cover the market news that's coming up, the earnings that are coming up. We also go through the market sentiment to see kind of how investors feel. And we also do technical analysis to see how the stock market's doing overall on the technicals. It is a free newsletter. All you have to do is go to stockcurry.vip/newsletter to get that free newsletter. That's stockcurry.vip/newsletter. Also, if you did get a lot out of this video, please be a good friend and share this video with your friends and family so that they will know what's going on in the stock market as well. And don't forget to hit the like button and subscribe. And if you missed the training that we did over the weekend where we covered how to sell options and how to sell multi-leg options, it's kind of a long training, but well worth it if you want to deep dive and how to make money with options. You can watch that free training right here.